Where do you think the play is in terms of future growth? Because this has happened before, right? We've gone into a period where, oh my God, you could do no wrong in real estate. And boom, collapse happens, right? With all the build to rent going on, with the multifamily stuff, where do you see that going, looking at what you're looking at? I mean, nobody has a crystal ball, but how do you see this playing out?
Yeah, so real estate's hyper local. So like you said, right now there's an exodus to Arizona, Nevada, those areas, New Mexico, and then you get into the Southeast. And a lot of people are coming from the Northeast to the Southeast. Primarily, that surge was from the pandemic. And we're also seeing a huge surge in vacation rentals, Airbnb. So those things have really taken off here the last few years because people aren't traveling outside the United States right now. That market could change a little bit and we could see a little bit of pressure there when people start traveling globally again. But really at the end of the day, real estate is all about, supply and demand. And real estate has always gone in these peaks because we get to oversupply with lack of demand. Right now we have the perfect storm. We have record low interest rates, we have record low supply and record high demand. What's going to change that equation? Interest rates are the key because people are buying payments. So what's going on right now is in a lot of markets, with interest rates where they are, you have to put a down payment up, but it's cheaper to rent. I mean, cheaper to buy at the end of the day a lot of times than it is to rent in average apartment because rents have gone up 20, 30, 40% in some of these really competitive markets over the last 2 to 3 years, 20% to 30% in the last year alone. So there's a lot of pressure on rents, which is driving people out of rental units and wanting to buy houses. There's millennials are the growing population of house buyers right now. There a lot of those buyers are getting driven out of the market because there's nothing out there. So that's why rents have been growing, and a lot of different markets have waiting lists for multifamily buildings. And if people can rent a house with a yard and not have to buy it and take care of the upkeep, pay the taxes and insurance and all that, that's becoming more and more popular for some people. There are some people that want to own, they don't want to rent, but really the key in terms of our inventory levels is the interest rates. If interest rates start going up, which they've already crept up, here in the last couple of weeks, and they reach, that 4% plus, that's going to change the housing market and inventory levels. You'll see more houses come on market, less houses will sell because people are buying payments, and that also affects values as well. Yeah, that's a very small percentage, and that's come way down. So what we've seen, the numbers are already out there, is that most of the houses that were in forbearance came out, caught their payments up, and they're fine. Very few of them end up going to foreclosure because there's such demand out there right now. So if somebody's in trouble, they literally can't make their payment, they can't make it up, they have to exit forbearance. The next step is loan modification. So you exit forbearance, your first option is loan modification. So lenders are very incentivized to work loans out with the borrowers. So if you want to stay in your house, and if a borrower wants to stay in their house, the lenders this go around versus 2008-9 are very incentivized and very open to keeping you in that property. But if you can't, then all you gotta do is put it on the market or sell it to an investor. So there just isn't enough of those at risk that are going to make a dent or could make a dent in the market right now, unless we have a huge market accident, overall stock markets start to tank, interest rates go up, things like that. But if markets go down, we have an economic shock like we did back in March of 2020. The Fed's going to jump in, keep rates down, pump money into the markets, and open up credit markets again. So I don't see that playing a factor at all, because it's really not that many right now that are at risk. Generally it really runs the gamut. I mean, I've got a couple of people that are just getting started. So number one, they have to be able to afford the mentorship. It's not a cheap program. Right. But generally it's going to be people that have had some sort of success in their life or their career. So I've got professionals that are wanting to start a business, whether it's real estate or something else that I'm working with. I have people in the multifamily space. Maybe they've got 10, 20 million under management and they want to get to 100 million. I had one group that I took from 100 million to $1 billion in the last year. They'd never raised more than $20 million. I helped them raise $100 million, taught them how to raise $100 million. So it's different levels. I have some that are like, companies that are teams. I have some that are individuals, and it's really runs the gamut. I have a few people that, have had big exits and, are north of 100 million. And I'm advising them on deploying their capital and, making investments and things like that. So it's really all across the board. And it's really generally somebody who wants to accomplish something or wants somebody that they can talk to about their deals, about their business, about, whatever it is they're getting into. So it's mentorship, it's coaching, it's a lot of different things that people come to me for, but mainly to be able to have somebody to bounce ideas off of, help them grow and scale their business, put a plan in place, execute on that plan, and do something, that they want to accomplish, that they might know how to do it and have the information, but they don't know how to apply it in the right way. And then more importantly, not step on a bunch of landmines along the way and cost themselves a bunch of time, most importantly, and money.